welcome back to the venture stage at this year's Eigenkapitalforum Online. It's my great pleasure to host the upcoming panel on how public money shapes the VC industry. My name is Fricke, and I'm very pleased to have a very esteemed team of guests gathered here for this panel. We have two public LPs, we have two very successful funds, and without further ado, I would just like to start with a short round of introduction, and then we can kickstart the discussion. Maybe Jörg, you can go ahead with a quick intro.
Sure, my pleasure. Jörg Goschin, I'm heading together with my colleague Alex Thees, KfW Capital. KfW Capital is a subsidiary of KfW Banking Group. We invest as an LP into European venture funds. We have a budget of 2 billion euros, which we spent over 10 years. We started in October 2018, so we are now just about in our started our third year, and on average we commit 200 million per year into European venture.
Thank you, Jörg. Maybe Björn, would you like to continue?
Okay, so Björn Tremmerie, I'm responsible for technology investments, fund of fund-wise, that is, at the European Investment Fund. For those not familiar with the EKF, we're the largest funder of venture capital funds in Europe. Depending on the year, we invest 1.5 to 2 billion per year in venture funds in Europe. Been doing that for more than 20 years. Gives us good insight on what's happening in the market.
Great, thank you. Christian?
Hi, thank you very much for having me today. I'm Christian. I'm a partner at e.ventures, a global operating VC firm located in San Francisco and Berlin as the main offices. We roughly manage $1.5 billion and invest across different stages from seed to growth. And in my free time, I'm also the president of the German Startup Association.
Great, thank you. And then Fabian.
Yeah, thanks for having me. My name is Fabian Heilemann. I'm a general partner at Earlybird. We are a pan-European early stage firm, also close to 1.5 billion euros assets under management. We've been the first investors in companies like N26, Smava, or UiPath. And my personal interest, having grown up as a serial entrepreneur and having turned VC 8 years ago, my personal interest is to explore the intersection of for-profit investing and social and environmental impact technologies.
Very good. And that's certainly a topic, Fabian, we will cover also later on in the discussion. But maybe let's kickstart things with a fairly obvious question. So also the market for fundraising has been impacted by the recent COVID pandemic. Maybe starting with Jörg, what's your view in terms of fundraising and also investing from a public LP perspective?
Well, from a public LP perspective, we've all been surprised by the Corona situation. On April 1st, the German government has announced a state program for startups. This is a 2 billion program, which is based on two pillars. And the pillar one, KfW, together with the European Investment Fund, is distributing 1.2 billion euros within this year to European VC funds in order to help their portfolio companies, which were negatively affected by the Corona crisis, to over the issues.
Seems we have lost Jörg along the way. So maybe in the meantime, while he's trying to get back on track, Björn, you can continue. And as you have obviously a very long track record also with the EKF and been investing in the market for quite some time, maybe you can also compare the current crisis maybe with some of the recent ones like the global financial crisis and maybe even the dot-com bubble.
Yeah, but perhaps just to finish off on what Jörg was saying as well, indeed, we're co-helping Germany with the implementation of the German Corona matching facility. So it's a tool that was developed and put in the market explicitly to help companies in the current lockdown periods to have access to funding. So there's close to $1 billion that I think KfW Capital and EIF have in the meantime under approval and are disbursing to companies through GPs with the aim of really making the negative consequences of the crisis as light as possible, also in the startup field. So just wanted to say that as well. On the European Investment Fund, we're also putting in measures with the European Guarantee Fund, so that we can help companies and funds to fundraise. So that as an element as well. But in the current times, what we have seen, especially with the prior crises, and in my career I've seen the .com and I've seen the global financial crisis. What we see here is that it's not a systemic element. It's an endogenous factor caused by a pandemic, which had nothing to do with the health of the economy or of the venture capital ecosystem worldwide. And actually, if you look, the time it took for stock markets to recover to the levels before the crisis were actually very short nowadays. So I don't know what it will be in the future with the world going into second waves and what have you. But currently, it seems that stock markets are holding up quite well. And I would say that one vital element of making certain the stock markets are holding up well is the technology element of it. So the tech side in which we are all operational is actually making certain that we can still operate as a society in the lockdown. There's online consumption, there's digital entertainment, there's flexible working tools and environments that actually make that some of the negatives can be mitigated. And I think that's also a hint of what the future could look like going forward.
Very good. So maybe from a GP perspective, Fabian and Christian, have you observed any difference in how the LPs, either from a public or private side, have tackled the situation? What were your main differences and challenges also during these times when dealing with your own LPs?
Fabi, do you want to go first?
So, I mean, public side of the LP landscape, as Björn has also just elaborated, and as many in the market have probably followed, we did not basically see a slowdown with regards to their programs or investment pace, which is, I think, also well in line with the public mandate that they also have towards fulfilling a stabilizing and nurturing role in the tech ecosystem and VC financing landscape. And as Earlybird, with one of our currently 5 active funds, we have actually also participated in one of the IFE-backed or state-backed programs. And see our portfolio companies actually appreciating that support. On the private side, we saw many LPs in the first and second quarter still being a bit hesitant in terms of really getting to a completely virtual process of engaging with the GP. Not so much when it's about re-ups, but when it's about new GP-LP relationships. This is an unprecedented situation, and what we observe now in third and fourth quarter of this year is that actually quite some LPs have seem to have gotten comfortable around building new GP-LP relationships based on purely virtual interaction or partially based on previous personal interaction in the past years, but not as part of the current process.
So just to continue on that, and I would second what Fabian has said, and just anecdotally from many fundraisings that I have seen over the last couple of months, I would say that when the corona pandemic appeared for the first time, I think LPs and everybody was basically shocked, and the momentum decreased for the short term. But then when especially tech stocks and digital companies appeared to be somewhat also winners of this crisis, I even felt like that the momentum again accelerated on the fundraising side, both for the startups as well for the VC funds. So I would say that even though we lost some momentum maybe between March and May, we got new momentum between August until now, and I see many funds being closed in the market. And even though it's just anecdotally, because no one of us really can say what the real impact of this pandemic will be in the long run, because we just don't know about bankruptcies, et cetera, it still feels like that the digital world and internet companies as a whole also are producing a fair amount of winners. Of course, with a fair amount of losers also, but that's just the game.
Very good. Maybe a follow-up question to that one. Now, maybe Jörg, for you, because you got cut off also. You mentioned that you, from a GP side, also started with the, let's say, digital investing process and so on. Would you say also from an LP level, this was a good time also for first-time funds, or were you rather focusing your investments on existing ones with a proven track record, so to say, like a flight to safety rather than using new opportunities?
No, actually, KfW Capital, we invest into first-time fund as well as we invest into established GPs. Certainly, the Corona situation was not easy for anyone. It made the situation more difficult for first-time funds. But also in this pandemic situation, as mentioned earlier, we've seen first-time funds which went to the market. Also, we've seen established GPs raising the next fund. So the fundraising activity certainly slowed down a little, but not with the effect that we didn't see any first-time funds or the follow-on funds of the established GPs. So we very much welcome first-time teams to the market. As we see, there are still not enough teams and funds around. There's certainly a lack of later stage capital. So we need especially more funds which address the growth capital market. So this would be very important from our perspective.
If I may quickly add on the first time teams like KfW Capital, for us also first time teams are a vital part of the role that we do, bringing more teams to the market. I think there's still room for a European venture to accommodate more VCs, be it on the early stage, across all stages actually, definitely also on the late stage. The only thing that the pandemic has created is, for me, a restriction on travel, and we're not a direct investor, so there are plenty of virtual data rooms, and they all work fine for us as well, for as long as we have ever met the team or actually invested in a team. So it's not that we're not investing in first-time teams, but the only asset that I can actually due diligence is not available. I don't like doing due diligence virtually with a team that I would then entrust with 10, 20 or 30 million and that I have not met a single time. I don't want to simplify my job, and I don't want to simplify the job of GPs investing directly either. But I think many of the colleagues here on the panel, if you invest directly in a company, you can still test the software, you can still test perhaps an online product, what have you. Whereas the thing that we need to test, the team, we're not capable of accessing it. So I want to send that signal to the market that it's not that EIF has stopped investing in first-time teams. It's just that we cannot travel and come and visit you to do actually what we do as a job.
Very good. I'm not sure whether you, Christian, or Fabian would like to comment on that one, how you have tackled that you cannot really meet with the founding teams and then really meet them eye to eye. Has this been a great issue for you, or did you come up with, let's say, creative ideas to overcome these challenges?
I mean, maybe just anecdotally, and this is just n equals 1, because I can only say for e.ventures how we've been dealing with that. We have had, by the way, in close conjunction with our LPs like KfW and also EKF, also just adapted and adjusted our strategy in a way that we would invest purely virtually, because we just have to get along with this new normal. We've done I think 5 deals now purely virtual here in Europe. But we would just invest into earlier companies. We would rather go for seedish opportunities where we evaluate market and team risk and can easily reference, but don't have to invest like a 5 to 10 million check now in an early stage company. So we would go a little bit earlier. and we would be very open to do growth. But on the early stage side, where you have like a pretty high risk on the inflection point of the investment, it's something where I'm exactly of the same opinion as Björn, that it is just really hard to get to know a team without ever having an opportunity to meet. Obviously, you can spend much time on a virtual call like that, but I think it's not the same. So let's see where this is going. I mean, if this pandemic keeps us busy, and we will have a third wave and a fourth wave, who knows? Maybe we will have to actually really adjust our entire model.
Very good. So now that we have maybe focused slightly more on the negative aspects of the virtual fundraising and pitching, I think there's also a positive aspect to it, that it's definitely very climate friendly. So that brings us to the next topic of sustainability. I know, Fabian, that you are deeply involved and also in some initiatives. So we can share with us how you incorporate this aspect into your own investments, and maybe also to which degree it's also inflected into your own strategy by your own LPs.
Yeah, so there's basically three aspects that I would like to highlight, and when we're talking about, especially environmental sustainability, my personal belief is it's always important to work from the inside to the outside in order to preserve integrity and to lead by example. And that being said, at Earlybird, basically 2.5 years ago, we started to optimize our own operations with the goal of reducing our primary emissions footprint, but also then offset the residual emissions. And shortly thereafter, we started our climate tech investment practice. We have a handful of investment practice groups, for example, also for enterprise SaaS, for AI, for fintech. And in that tradition, we set up a dedicated practice that started diving deep into a certain set of sectors and technology in a broad. And the third aspect that is part of our approach of basically tackling this topic of, you could also say, of accepting responsibility as an investor for environment and also for society. The third aspect is our close cooperation with Leaders for Climate Action, which is essentially a charity that my brother and I co-founded alongside a handful of other entrepreneurs from the Berlin ecosystem, with the goal of decarbonizing the European digital economy. And with Leaders for Climate Action, we jointly set up a so-called sustainability clause that ever since we include in every term sheet that we issue at Earlybird, but also in every shareholder agreement. So it's legally binding, and it's basically an entry level. Way for all our portfolio companies on an annual basis to measure their emissions, to reduce to the extent possible without jeopardizing their business, and to offset the residual. And this loop, again, is repeated on an annual basis. That's kind of the entry-level commitment towards environmental sustainability that we expect from every portfolio company. And now 1 year into the process, and a double-digit figure of companies where we have implemented that, I can luckily say that so far, almost 100% of the CEOs that we approached were very open to that and said, I even appreciate that you are helping me by bringing a framework, because I felt like we wanted to do something in that direction anyways. We just didn't really have the tools. We just didn't really know what are the big levers in our day-to-day operation.
Very good. So, but if I understand you correctly, Fabian, this was mainly driven out of an own purpose, not really inflicted on you by your LPs. But maybe we can ask at least two of the LPs here in the room: is this topic also something you are really actively bringing to your fund investments, and also have maybe some KPIs to measure whether they have implemented, let's say, your vision, your criteria when it comes to sustainability?
Yeah, I mean, for KfW Capital, ESG is a very important topic, not only for KfW Capital, but KfW as a banking group has the whole topic of sustainable finance as one of the key strategic initiatives of this declared for this decade. So we are in line with the activities of KfW Banking Group. ESG and impact investing for a long time have been in contrast to return on investment. I think, and we strongly believe that things are changing, that ESG and impact will be a precondition to achieve returns in the long run. And not only in the long run, but in general. And it's very important to be prepared also for the GPs when they are in the fundraising phase, especially. They face investors, institutional investors, which they strongly want to have on board as their LPs, and they address them with a lot of questions about how they implement ESG in their organization, how they report ESG, which importance or which criteria they apply when they select their target companies. And this is all very important, and one has to be prepared for this. And we, KfW Capital, we support the GPs in addressing those issues and to have proper answers for their LPs when they are asked about the ESG topic. So we think this topic will be the topic of the this decade and the next 10 years, and we think this needs to be addressed strongly.
Also at the EIF side, we're a subsidiary of the EIB, the European Investment Bank, and the EIB has now a mission to become the climate bank. So also to make certain that we pay sufficient attention there, so that we contribute to the necessary CO2 reductions that are needed to hopefully still reverse the trend that we're observing now. Now, whether we do it the same way that Fabian has presented it, there's some nuance. We have a variety of products. We have our own ESG charter that we live up to as an institution, as the EIB group. We also, each time now that we invest in funds, we ask them to fill in an ESG questionnaire, which is not only in relation to environmental topics, but also the governance and the social related sides. So those things are covered. Another dimension that we're very actively pursuing in order to contribute to this important debate is we're actively investing in environmental and climate funds, also through clean tech, but we're also doing social impact funds. So when we do that, one important element that is crucial for us is to make certain that there's ways to differentiate chaff from the wheat in terms of people that are using ESG as a marketing tool, as opposed to people that are really living up to the reality of what needs to be done, and not just as a marketing element. And in order to do that, we've actually designed a balanced scorecard that each time a fund that wants to invest or is getting funding from one of our impact programs, if they get our money, they need to tie impact results, be it climate, be it social, also to achieving financial results, and vice versa. And the tying means that if you're achieving financial results and would be in the carry from a financial point of view, but you're not achieving the KPIs and the results that you had put forward on the impact side, that you're actually not going to get your full carry. So this is for us a mechanism that gives us certainty on two things. First of all, impact becomes something that is only used by people that are really interested about impact, because otherwise they would feel it immediately on the carry. Second of all, it allows us to design systems and tools that allow us to track and measure the impact, which is still something which is a bit holy grail in the impact space. But that methodology is now something that we're implementing since a couple of years, 4 or 5 years, and we're starting to see the first results. And I'm talking too long here, but the important result we're seeing as well is that this is showing that when you pursue an impact strategy, it's not going at the detriment of return, financial return.
Very good. So I see already some strong influence also here that these criteria also adhere to. Christian, maybe from your perspective, besides topics of ESG and sustainability, maybe we can also add diversity to that mix. Do you see other topics which are currently being, I shouldn't say enforced, but encouraged for you as a GP to implement in your own portfolio?
Look, I mean, just to make that point that you just opened, I think we have to see this not as an obligation and that something is enforced on us, but we have to see this as a huge opportunity. I think that we are at the verge of really building out this European startup ecosystem. The ecosystem is maturing, and I think we have some pressing challenges in front of us, be it climate change, social unrest, and many other things. So I think it is an European opportunity to come up with solutions. And in my opinion, it is us as the investors, and it's Björn and Jörg and all the startup founders as the smallest units, the genesis units, in order to provoke change. And in my opinion, that is something where all of us should be working towards a common goal, because I think it should be really clear that this is not about, hey, is EIF making it more difficult for me at e.ventures to get a better carry or whatsoever. No, like, it's really about, this is an important thing, and we all have to work on this together. And as Björn said, I think this misconception that is impact or social or climate is always coming with returns that are not as good as non-impact, non-social, non-climate investments. It's just simply not true. We can show that the markets has been changing. The consumers as well as the corporations, they want these kind of new standards. So it's something where we just all have to work together. And I think we should add to this list, be it diversity, be it, I founders from everywhere in the world should feel like that Europe is the place to be, to live in a free democracy and a social market economy that enables us to pursue ideas that can solve the biggest problems on earth. And I think anything that adds to this narrative is helpful.
Really agree, but I could also imagine that maybe particularly in the beginning there was some convincing needed also more for the private LPs that also, let's say, impact and diversity can have additional revenues rather than looking purely at the financial outcome. Have you experienced any difficulties here with dealing with the different LPs to say, okay, now we would like to incorporate these kind of KPIs also as a measurement, and maybe focus less, or not less on the revenue part, but keep this in mind as well? Maybe Fabian, for you.
Yeah, so that's a tricky question. So I'd say you need to go kind of category by category. And in my point of view, or what we observe anecdotally, the large financial institutions tend to start moving once their CEOs start moving. Yeah. So Larry Fink, for example, at BlackRock, he gave very clear statement to all CEOs in his portfolio and to his teams. Yeah. But all of the fund of funds or banks or insurances, etc., investing in the European VC landscape are that determined in the way they want to change their investment policy. I mean, Jörg and Björn have made very clear statements on behalf of EIF, of KfW, also clearly here on the fast-moving side. And we also see family offices to be rather fast-moving, where you basically have one principal who is deciding on the policy rather than, say, complex layers of hierarchies and decision-making. And once those principals at the large family offices basically change their mind, their policy immediately changes. Yeah. So it's really a bit of kind of category by category. Also on the corporate side, I'd say it's a bit of it's a mixed picture. Yeah, it's a mixed picture. But generally, our efforts are not driven or are not induced by, by requirements from our LPs, but our efforts are induced by our conviction of doing what needs to be done and by our conviction of doing what we think is the right thing to do. And we hope that LPs agree with us and see a sense in the policy changes that we implement on our end. But we would even do it if that meant for us to lose some LPs, because it's our conviction that this is right and that this is our way of living up to the responsibility we do not only carry for delivering 15, 20, 25% net IRR, but the responsibility we also carry towards society, towards future generations, and towards making sure that we do not deliver 25% of net IRR at the expense of society and environment.
Good point. I think I see everybody nodding. It's probably a good point we can all agree on. It's unfortunate we are already at the end of our short discussion, and I think we could still cover plenty of topics. I think it is a good start also to keep the audience motivated and interested. And with that, I would like to really say a big thank you to all of you, Jörg, Björn, Fabian, and Christian, for making it possible to join our panel today. Have a nice day ahead, and all the best for your future endeavors, and let's stay in touch. And with that, I would like to hand over to my colleague Lukas, who will continue to moderate our venture stage. Thank you very much, and see you soon. Bye-bye.
Thank you. Bye-bye.
Thank you.
Thank you. Bye.